trader, Tina here, ShortMeTina.com with my recap. I know I'm not doing the dailies anymore, but right now I'm trying is the key word. I'm trying to commit at minimum to at least a weekly video. So if you're still rocking with me and you're still here, thank you so much. What's today's date? I don't want to lose the script too much. Today's Wednesday, so happy Wednesday, happy hump day. Two more days and you're almost there. Hopefully you and your family are doing extremely well. And before we continue, do me a solid, same old song and dance. You gotta like the video. If you learned anything, do me a solid, like the video and comment it. It doesn't matter what the comment is. It doesn't have to be related to the stocks that I talk about. I could be a question, just let me know that you're listening and you're there. So again, the last video that I did after I took about a 6 weeks, I guess, I don't know, a hiatus. I don't know what you want to call it, sabbatical, whatever. I did one about, I want to say 7 or 8 days ago, and I highlighted some stocks that I was really feeling and that I was in. And those stocks, I'll talk about some of them because they have, in many ways, exploded in a good way since that last video. But as usual, I usually kick it off with a little discussion on the SPY. I'm not going to be too long because the last video was about 22 minutes and I don't want this one to be that long, but I'll try to pack as much information as I can in them, or in this one anyway. So the SPY, it's a daily chart. So I know a lot of folks are wondering, I didn't do the calculation, maybe I'll address that the next time, but a lot of folks probably think that, we've ran up too much from March's low, and in many respects, I mean, they have a valid point, right? The market is probably up something like north of 40 or 50% since March's low, and March was not that long ago, right? It was just a few months ago. So a lot of folks, if they're not on the sideline, because I believe a lot of people are on the sidelines, they're expecting a huge pullback, and that's not to say, or they're expecting a crash, right? That's not to say it's not going to happen. Obviously, the market is very dynamic. Every single day you have new players doing different things, and that just sort of changes the cosmetics of it. So I'm not saying that the market is not going to tank at some point, but for me right now, it's acting in a very bullish manner. One, because it's up about 40 or 50% from March's low, and two, because we've had, in my opinion, those sort of quote-unquote corrective phases that just helps with the healthiness or the healthy trajectory of an uptrend. And if that doesn't make sense, I'll give you an example. So again, from March, we rallied about 40%, right? We topped out here in early or mid-June. That was around, let's say, that 323 mark. Then we pulled back for a few trading days back to the breakout base of around 295 to 300, right? So from 323 in mid-June, we pulled back. And so for me, that was like that corrected phase. That was like that digesting of this 30 to 40% move, right? The correction wasn't like 20%. I think we pulled back to the tune of around maybe north of 10%, which is extremely healthy. We popped a little, we pulled back, and so sitting here at 316.18, two things. As long as we can stay above this area that has served as resistance for a long time, let's say that 295 to 300 area, served as resistance since January of 2018, definitely over 2 years, going on 3 years. As long as it can stay above there, I think I have to remain bullish. I have to keep my long positions. And obviously, I'm going to be paying attention to where we topped out back in mid-June, that 323 level, to see how the market reacts once it gets there. And I'll know more or less if I think we're going to tank or if we're going to rally and test all-time highs. I'm going to always bet on the bullish side because it's far easier to be a bull than a bear. What else? All right, and so we have Tesla. It's off about north of 2% on the day. That's fine to me because it's had a massive run. We closed at around a little shy of 1,400. And when I did the video on Tesla, and disclaimer, I am long the SPY and I'm also long Tesla. And I've, again, we've been in these trades for quite some time. Anyway, so when I did the video, the last video that I did, and you can 100% check it out. I believe it was June 29th, around here. before this move. And I said, well, based on what I'm seeing now, I would not be surprised to see Tesla trading at 1,500 to 2,000, obviously 2,000 coming a little bit later on. And the reason that I said that is, let's see if I can do this. So we had this huge run up, right? And folks are, and I see it all the time, and I don't know why people do that. I mean, maybe I have reasons, or I can, if I sit and think, maybe I can come up with a reason or two why people do it. But not, when a stock is showing strength, and clearly Tesla has a history or a tendency to make these sorts of moves. And so the bears are saying, well, the stock was trading at around, 300-400 back in March. Here we are just 2 to 3 months later, and it's already topping 1,000. Is that an insane move? Yes. Is it a bubble? Perhaps. All these things can potentially be true. It does not mean, if you're a technical trader, if you're a fundamental trader, maybe you might not get into a trade like Tesla because you don't feel like the valuation makes any sense. And if you're consistent with your views, I think that's great. But as a technical trader, there really isn't, in my opinion, such a thing as the stock is way too high. I hope that makes sense. Anyway, so a lot of folks, because the stock made this huge move off of the March's low, from 300-400 to 1,000 in a span of 2 to 3 months, they're like, you know what, too fast, too soon. I could see where folks are coming with that, but when I see something like this, what happened in let's say early June, where it's kind of trading sideways, for me it's digesting this move and it's gearing up for a next leg up. So when I saw this and I did the video on June 29th, in my opinion, because I'm seeing this sort of sideways range bound action after such a huge move, I more than likely felt that the stock was gearing up to go higher. Which was around 1,500. And yesterday we got to 1429.50. Now it becomes a little bit, and I'm still long. I think when I initially spoke to premium members about this trade, it was trading at around 1,600, and that's another point that I'm gonna berate until folks say, yeah, Tina, I think you kind of make sense. If a stock is showing you a profit, as tempting as it is to take it, and I'm not saying to not take profits along the way. Obviously, you want to look at your own individual situation. But for me, what has helped me achieve profitability this year after we had that massive crash back in February is the fact that once I got into a trade, if they're showing me a profit, I'm holding on to them. And I did that with Tesla again when it first came in our radar, and we actually got into the trade. I think it was trading at around 600. So anyone that has held is up over 100% on this trade. So back to the script. Paying attention, watching closely what it does here. Now, if it starts to chop around again like it did down here, so if this becomes the new range, expect a next leg up. We're not there yet. Again, I am going to reassess, but for now I'm still long, and I still see 2,000 as a possibility. What else? Okay, and we have Spotify, another trade that we're long. If you look at Tesla's chart, Spotify's chart, I'll talk about Slack in a few minutes. It's kind of like the similar sort of trading patterns. I see it. Hopefully you see it too. Hence why it's another stock that I was expecting to have an explosive move. Hopefully you follow me because I actually, when I first told the stock about, pardon, I'm fumbling my words. When I first told like premium members about the stock, it was trading like somewhere in the low 100s, right? We took the trade around there. I held on. I saw that after it broke out, right? It broke out from a 2.5 year range, right? Broke out. This is the breakout right here. You see these long, let me zoom in. You see these long green candles here. Boom. In my opinion, that's a good sign. Then we started to chop around. I like that, right? Once it breaks out, I don't like it to just keep running. You'll see that with a lot of penny stocks, right? It'll break out. It'll just run. And stocks like that, when they collapse really hard and quick. Hence why those penny stocks usually shed like 40 to 50%, in a day. It doesn't give itself time to really kind of digest big moves. Look at Tesla. Spotify here, we had that big move, and we didn't just run, right? We kind of trade sideways. Let's take a little break. We ran a bit, and now we're trading sideways. We're taking a little break, in my opinion. So what I'm expecting next with Spotify, if it breaks out of this like 275 top end of the range, this is like clear, in my opinion, Darvis box. But if we can again chop around a little bit, and then we can break free of this range, I fully expect Spotify to get to that 300 mark, right? So another stock that I've held for a long time because it's helping my bottom line. Why let go of stocks that are showing you a profit? Now, if it collapses, right, and it kind of breaks down this level here, I'll reassess. But as long as it can chop around here, I think the next leg up will get the stock to 300. What else? All right, video's getting lengthy, so I'm not going to spend too much time on Zynga, but it's kind of similar setup to Tesla, Spotify, and Work, which I'm going to talk about in a minute. And we've been long this since the threes, right? Again, why let go of what's showing you a profit? So remember I talked about, breaking out of that range, which it did right here, having a huge move up, which is these three candles here, and digesting that move. This is the digestion right here, in my opinion. And so when I did the video on the 29th, right, I was like, okay, well, we have those three green candles. It looks like it's digesting here. More than likely, we're going to take a next leg up. It seems like that's what it's doing right now, where we closed at 1025, up north of 4% on the day. As long as it can stay above that 975 level, I can see Zynga going to 12. So not too late to get in. It's never too late to get in if you know where to jump in. All right, so still long and still bullish on Zynga. What else? All right, so you can read the notations if you want. It's a lot more clear on, and I go over it in the last video that I did on the 29th. Again, similar setup to the videos that I've done, Tesla, Spotify, Zynga, now Work, right? You had the consolidation, you had the breakout here. And this is why I've been telling folks to be patient with Work, because it has not had that run that the others have had, whatever. Because in my opinion, I'm waiting for that next leg up, right? So we had the big move, right? We broke out. You can see it here. Let me draw the line again. We broke out. And so right now what we're doing, in my opinion, is we're chopping around, waiting for that next move up. And so for me, as long as it can stay chopping around, when that next move happens, it's going to be, in my opinion, a bit more sustainable. So what figure should you be looking at, in my opinion? We should be paying attention to a close in like the 35-36 area. If we can get it, and you see, like, we're kind of close, right? We had a bit of action today. I'm not quite sure why. I didn't read the news. See 9% or close to 9% on the day, close at 34.24. So we're really here. We're at that upper end of that shorter term range. So if we can actually break out of that and sustain that, right, that would be like a 35-36 print. Then more than likely, like I've been saying for a long time, I could see Work going to around $40 and beyond with a strong move, right? Because we're basing here. So the next leg up, generally speaking, should be a strong one. And full disclaimer, the stocks that I've talked about, SPY, Tesla, Spot, Zynga, we are long. I am long all of those stocks. And Work, another stock, again, we mentioned in the premium member community, and so we've been long this for quite some time. Yeah, that's it. So pay attention to Work. The move has not started, in my opinion, as of yet. If I wasn't long, I would be looking to get in anywhere around here. What else? And Twitter, a few honorable mentions. Again, full disclaimer, full disclosure, another trade we took in the premium member community. So this one actually made it, it was a newcomer to our free watch list at ShortMeTina.com. When the stock was trading, I believe, around 30 or 31, I said, hey, look, holding above support like you see here, I call this support, holding above support. As long as we can stay above here, I think the stock is going to make an attempt at the previous June high, which it did. Today we went as high as $36.98, north of $37. I said it could probably get to 35, 36 in a short period of time. It took about a few trading days to get there. We closed at 35.41. This chart is kind of funky. You can see we have all those gaps. Not necessarily a chart that I like to trade, but I've been in and out of Twitter for a while, so I kind of understand how it functions. But yeah, with a continued bull market, perhaps you can see a 40 print. I can't see this yet going parabolic the way Tesla did, and Spot and Zynga, and potentially work. But you can still probably get a few points. What else? You can still probably get a few points from here. What else? All right, and so I'm not sure if we're gonna round it out with Snap. I might do one more really quickly. So another stock you wanna keep your eye on is Snap. I'm not saying it's ready to make that huge run, but sitting here at 26.41, like I've been saying since the stock was trading around 8 or 9, I've been saying this for a very long time. Eventually, it's gonna be one of these beloved stocks. Eventually, it's going to reclaim all-time highs. Anyone that trusted that message or believed in that message is sitting on some pretty nice profits. And I've been long Snap for a very long time. Again, just keep holding on to those stocks that are showing you a profit. We're sitting here at 26.41. I'm liking the move. So the end game, not the end game, but the price target that I had on Spot, or how I envisioned it trading, is eventually retesting all-time highs, which is 29.44. I still see that happening. How fast we'll go beyond that, again, similar to the SPY, markets are pretty dynamic, so I would have to pay attention to trading activity once it gets to that 29 level, which I fully believe and expect that it will, or at least close to that level. So once it gets there, I can reassess. But sitting here at 26.41, we still got about 2 to 3 points of upside left. Let me see if I can do one more, and then I'll round it out. All right, so yeah, we're going to wrap it up with ticker AIHS. Huge winner on the day, so congrats to anyone who's been long. The stock is up north of 50% on the day. Haven't really been paying attention to the penny stock world, so I can't really say whether or not these stocks have been flying. I mean, 50% is clearly a good daily gain, but when penny stocks get going, I mean, they generally put up 3, 4, 500%, and I'm not sure if I've been seeing that much in the penny stock world. But anyway, here we are, up about 50% on the day. It's up an additional 2% in after hours. I see a quote of around 128. So the high of today was, what was today's high? Oh, actually, oh yeah, I'm gonna reassess. I didn't even see all of that. So the low is 125. The high of the day is 226. So we closed near session lows. If I'm reading this correctly, yeah, closed near session lows. So that's not a good sign in my opinion. Although it's up slightly in after hours, it's up about, like I said, additional 2%. It's never good when a stock closes close to session lows. I mean, you could potentially get an additional 5 to 10% pop, but I wouldn't bank on it. Because technically speaking, or generally speaking, when stocks are gonna run, right? They run. Had it have closed near session highs, had it have closed close to 226, my story would have been a little bit different. But the fact that I didn't even realize, I was just looking at the percentage gain on the day. I didn't realize it closed literally at session lows, which is not necessarily a good sign heading into the next day. So if anyone has followed me, you know what I'm going to say. You definitely want to pay attention to what's going on in pre-market. If we can't reclaim, or if it dips below 125, look out. Not a good sign in my opinion. All right. So that's my take. And that's it. Tina here once again from ShortMeTina.com. If you enjoyed any portion of that video, do 3 things for me. One, again, comment in the comment section, like the video. 2, ensure that you're subscribed to our YouTube channel at ShortMeTina. And the last thing, right now we're still hosting that free 14-day trading course. It essentially details a lot of the things I've learned trading the stock market for north of 20 years. It's completely free. Granted, we do have premium courses, but I give you some stuff, in my opinion, valuable stuff that gets you on the right track for the first 14 days. So if that's something that you're interested in, definitely head on over to our website, ShortMeTina.com. Sign up, become a member. Thank you for listening, and as always, thank you for the support. Again, not doing daily videos. I'm trying to keep them at once a week. So, if anything, I will talk to you sometime soon.